Our friend Rick Santelli is standing by. I would say normally after an crazy, insane run and the Dow hitting 40,000, there's going to be a lot of sell-off today and a lot of profit-taking. But, Rick, nothing makes sense anymore. Nothing. Nothing makes sense with money. Nothing makes sense. So who knows what's going to happen today?
Well, I think there is some truth to that, but I also think that as we do a forensics on the past couple of years, we can see where we went wrong in our assumptions, and we can put it together to make some semblance of order out of it, Steve. I think the important thing to consider is FOMO, fear of missing out, but not the fear of missing out most listeners are most familiar with. I would say more from an institutionalized perspective, meaning there's very large institutional trading entities in the world. Many of those run on computers, and the decisions that are being made to go long or short, to look for higher prices or lower prices, are modeled in the computers. So they're almost like an artificial intelligence trading mechanism. So the markets have changed. But all these various mutual funds and institutional trading entities have what we call bogeys, Steve. In other words, there's a metric in the marketplace, whether it's the S&P 500 or the Dow Jones Industrial Average, that their performance is compared to. So as those performances go up, maybe driven by momentum models, these big institutions have to ride along with. Otherwise, the teachers, the firemen, the policemen, your mutual fund, if you have a retirement account, isn't going to keep up, and you're going to move your money to one that will. And it becomes self-fulfilling to some extent. That's part of it.
All right, so tell me, because nobody knows bonds better than you. When the market goes bananas, bonds generally have a bad day at work. And in addition to that, your 401k, when the market goes up, generally benefits heavily. Other than looking at your 401k and smiling, we don't advocate you do anything with it. In most cases, you can't because you're already in. But why don't you tell me about the bonds? What's it been like for bonds in the last week, 2 weeks?
You know, for bonds, it's been yields moving lower, okay? And just to set this up in a very generalized way, it wasn't that long ago that we were looking to test, and briefly, we're right at 5% in a 10-year maturity 10-year note, okay? 30-year bonds used to be the benchmark. We'll talk more about 10-year notes. They're most associated with mortgage rates, which people seem to understand pretty well. So that has since moved down into the low 430s, and one of the main driving forces there has been on the upside. It was our debt and all the auctions. We have to auction off lots of these 10-year notes to take in money to pay our bills because we're spending more than we're taking in through taxes. So to make a long story short, there was a little easing back on some of that nervousness. So as rates came down, along with the notion that inflation was coming down, which was the main force of why interest rates moved to these dramatic levels we haven't seen in over 20 years by the Federal Reserve. Now, even though inflation currently, let's say, in the 3.5% area, according to most metrics, isn't at the Fed's preferred 2% target, which historically is the reason they're allowed to lower interest rates, it's come down to a point that the Fed seems to have confidence, and the market has confidence in the Fed's notion that they may be able to lower rates from here, even if they don't necessarily get to their target. And that is another reason fueling what's going on in the equity markets, lower interest rates.
That does make sense. Jane.
Well, and you might have just answered this, but with the increase in the Dow yesterday, I guess you could say that corporate America is in good shape. Does the stock market fully reflect the state of the U.S. economy, the overall U.S. economy?
We have a split U.S. economy. So let's look at it this way. There are plenty of businesses that are, for example, in the AI, artificial intelligence space. You look at chip maker NVIDIA, whose value has skyrocketed, and I mean skyrocketed to over $2 trillion. Microsoft capitalization over $3 trillion. So those large tech companies were intrinsic in getting some of this going. But yes, corporate America is doing pretty well. The problem is when I say we have a two-speed economy, just think of it this way. There's those people in the world who need credit, and there's people in the world who don't. So you might have been 55 to 60, COVID hit, and you decided, heck, I'm going to retire. I have a decent amount of savings, and I'm going to stop working early. Now your savings are generating a lot of money that you can spend. On the other hand, there's younger people who have student loans. They need credit. They need credit to buy a house. So interest rates are working against them. So that portion of the economy is hurting. And housing is a huge component of all of this because of the cottage industries, remodeling, moving, buying furniture. Now, granted, part of that still works if you don't move, but with interest rates near zero for basically a decade and then running up to over 5% in such a short period of time, we've landlocked housing to the people that live there because they can't afford the newer spectrum of rates to move. So that aspect of the economy has been shut out, and one of the main reasons nobody thought the stock market would do well. But listen, as interest rates come down and this faith comes back that maybe we've seen the peak there, that could loosen the housing market and really unleash another group of forces that could work within the economy in a positive way.
Yeah, and the bottom line here seems to be, obviously get a good broker and hold on to them like, hug them like you do your kids. But in the meantime, if you're going to get involved in this game beyond your 401k, pay attention to what goes on. Don't become a day trader. Be conservative based on your age, and don't risk any more money than you're willing to lose at the casino. And talk to your wife or your husband about it as well. But I do have one political question for you, Rick, and that's this. I have said forever that Biden's comms team is the worst I've ever seen in the White House. The president
Why
gets...
do you say that?
Because they can never get a good message out when he's doing something well.
Let me just interrupt you there.
Well, hold on. Let me make the point, then you can interrupt.
Okay, go on.
Yeah.
Go on.
So in the case of this uptick in the market, they will not be out in front of us because presidents generally get too much credit for a bad economy and too much credit for a good economy. A lot of it's always fluid. You inherit what you inherit. You try to make it better. Maybe you do, maybe you don't. Now, please interrupt.
Okay, listen, I'm in agreement with you on much of that. I think that the man in charge gets blamed because he's sitting in the big chair. But I do think that anybody who's watched the economy understands when COVID hit and you shut it down and then you reopen it, things are automatically going to happen. The U.S. economy in many ways is a perpetual motion economic machine. Having said that, inflation, when this president came in office in January of 2020, the inflation rate on the CPI year over year was 1.4%. In June of 2020, it hit 9.1%. Now, Jared Bernstein happens to be the chairman of the Council of Economic Advisors for President Biden. And he was asked in an interview yesterday why the president keeps saying inflation was 9.1% when he took office. It was 1.4%. And the only reason I'm bringing this out is that this Jared Bernstein went to the mat trying to say that the president wasn't fibbing. But you could go to the Bureau of Labor Statistics website and see the facts for yourself. And the reason I bring this up is it's not necessarily a communication problem, or why would the president and his men keep fibbing about these
Well,
things?
but it is a comms problem. Well, look, you know how the White House works. It is a comms problem when you have a run-up in the Dow at 40,000 and they can't get out of their way to get a story out. I'm not taking sides. I'm just telling you, I continue to be stunned at the messaging that comes out of the White House. Either way, I still love you.
Talk to anybody under age 30, and they're not going to mostly be involved in the stock market. They're going to be involved in trying to buy a house. They're going to be involved
the real economy.
in all processes. Right. Everything's 22% higher in the last 3 years. So even though what you're saying is right, that the Dow touched 40,000 and Joe Biden is sitting in the big chair, but the reason he doesn't get credit is because if he wasn't sitting in the big chair, many believe it would have still have gotten there or farther. Because
listen, Rick, I love you, but you could fluid that argument in either direction.
I don't think so.
Well, you'll find that I'm often right. Just ask me.
How many electric cars do you drive, Steve?
I'm still at zero.
So, do you think there's an electric car in your future?
Well, I don't know. Let's say I get another 20 years. Maybe I won't have a choice. But let's pick that up next time we talk, because there's nobody better than Rick Santelli, and I hope you listen to his advice. Rick Santelli at CNBC. All right, late for the news here, because Rick and I had to agree that I was right. Is that not what you guys heard?
Right.